what section of the course are you right now?
Entry point.
Entry, all right. So entry is a problem.
Yes.
All right. I noticed that your analysis is also having, you need to work on it very well, because the trade or the analysis you posted on VIX75 the other day, you see I made a lot of corrections to it. So you have to still work on your analysis. But let's talk. Which of the all right. Which of the pairs do you trade? Which of the pairs do you analyze very well?
75.
All right. 75 and what? Your voice is far from the mic.
75. 75 1S and 25 1S.
All right. So I want to show you 75. All right. Now you said you started from the daily, right? But you say you started from the daily, but you are a day trader, right? Are you a swing trader? All right, you're a day trader. So I want to I don't want to waste your time, and I want you to get the thing very well instead of putting a lot of information that won't be necessary. If you're a day trader, you don't always have to go to a 24-hour. All right. If you guys notice me when I post trade ideas in the group, I always post the 5 minutes and the 1 minute I look for the entry. So try to master the 5 minutes and the 1 minute. This is where trading on the daily basis go on. If you're on the 24-hour or even the 1 hour, 1 hour only takes 24 candles to form. 24 candles can form a candle pattern. So if you're on the 1 hour, like 2 days, 3 days, you won't get a trade. But if you're a day trader and you want to get trade every day, stay on the little time frame, the smaller time frames, like the 5 minute and the 1 minute for your entry confirmation. So this is VIX75, right? And we're looking on the if you remember our rules, whenever you come to the chart, you have to look at the current pattern. So you have to look at the current pattern, which is like giving you have to try to spot out the current impulse and the current correction. You have to spot out the current impulse and the current correction so that you can be able to know the current pattern. So all of these are impulses. This is an impulse, right? This is also an impulse. This is also an impulse here. But which of the impulse is having swing points after it? You see, this impulse is having no swing point here. It's not having any swing point after it. This impulse is not having any swing point after it. But this last impulse, or the first impulse that happened before the rest two, it's having its swing points after it. And the swing point is, this one is a swing point, that one is a swing point, right? So it is having swing points after it. So that is the impulse that is current. The last impulse that have swing points after it is the current one. Is the current impulse. Okay. So we connect this high to this one because it is connectable. That is trend line rules. Two touches, right? So we're having an extending kind of structure. Then from the base, you can also just connect the base. 1, 2. So we're having these two, right? And what we are anticipating is the market to come and interact with this swing point so that we can know how or what we can do next. It depends on the interaction. If it comes to sweep, we can look for reversals. If it comes to break, we can look for pullback and continuation, right? So this is the 5 minute. And on the 5 minute, the market moves quickly. You can see maybe when we are done with this Zoom session, it won't take up to 3-4 hours before the market reach this level. If the market is continuously going, unless it's trying to consolidate, it won't take up to 5 minutes before the market comes to interact with this. But if you're on the 1 hour, if this were to be 1 hour chart, the whole of this will take 60 minutes before the market can leave here to here. The whole day is finished, and you will not get any trade to place that day. A lot of people on the market tells you, one thing about traders is that too many motivational bullshit that people don't understand how to use them. It makes people to mess up. Some traders will tell you, oh, we don't have to get trade every day. We don't have to do this. Nah, you have to. You're a day trader. All right. So you have to get trade every day. So when people don't understand why they are not getting trade every day, they're like, buy themselves a quote to rely on. But when people keep losing the market, they buy themselves a quote to rely on. They say, oh, the losses are normal. But you don't understand why you are losing. If you don't understand why you are losing, the losses is not normal. If you understand why you lost, then it is normal. All right. So this is the 5 minutes for your time for your 75. So when the market approaches this level, when the market approaches this high, then we will know what next to do. All right. When the market approaches this high, then we'll know what to do next to do, depending on the reaction. If it sweeps, like you know what the sweep means, right? You have gone through the course. When the
Yes.
market goes above and come to close below, that means it's time for reversals. If the market breaks significantly, look for pullback and look to join the buys. All right. Just like this swing. You can see this previous swing. This
Yes.
market broke through it. It broke above it. What happened? It only sold a little, and then it is now continuing. It is now a continuation in that trend. Many trendline traders are used to trading when it reject the trend line, look to trading reversals and reversals. But the way we trade, if you have noticed from the course, we like to follow the trend. This is actually an uptrend. We are
The
creating
trend.
higher highs and higher low. So you have to keep buying instead of looking for the lower for the little sells. All right.
Okay.
So if you also look at this current uh behavior the market is given, this current one, you can see it's looking something like trying to create a running channel, but it is not yet confirmed because the second swing is not really outspoken yet. We can't connect this one. We can't connect this one because this is just a correction. This is like choppiness. This is not a structure. Market is just choppy here. So until the market gives us a defined structure like this to this level or something there, then we can connect this. We can connect it like, let's say, if the market comes down something like this, we can connect it and look to also connect these two highs so that we can may anticipate a third touch, which is going to sweep this swing. We can anticipate a third touch, which is going to sweep that swing. Then we can look to sell. But until the market gives us that second swing, this second swing, we don't know if it's going to do that. So what we do is just wait. But since it's on the 5 minute, what I'm trying to tell you, since it's on the 5 minute, your waiting won't be a lot because the 5 minute move faster. 5 minutes is done, 5 minutes is done. So you have like I don't know, 30 of them. Like 30 of them in the 1 hour, I think. So 5 minutes and then the market is done. So it won't be a lot of stress. It won't be a lot of stress for you. So which other pair do you look at? You said 75 ones.
Yes.
Uh, I also want to add the 75 to my watch list. I think I'm gonna do that this weekend. I'll filter it and look to add it to my watch list. Try to always take advantage of if you are trading a live account, try to take advantage of the trade ideas I post on the Discord. I don't give you guys a
Okay.
particular entry because I want you to learn the entry, but when I give you the direction with the pattern, you can draw your pattern the same way, look at your own and look at my own. If we are doing the same thing, or if I'm making sense, or you are making better sense, you can also say it in the ideas group to see what you are saying that I'm not saying. Understand? Then you can look to take the trade if it is going to look to take the trade when the market meets the criteria for entry. Don't enter a trade without confirmation. Please don't forget that. No matter how frustrating it is, no matter how much you need money, don't enter a trade without confirmation, else you blame yourself forever. So this is the 15 minute, right? Like I said, everywhere is an impulse, but you have to look for the impulse that is having swing points after it. Don't forget that. So this is an impulse, right? This is an impulse. If I say look at the current impulse, someone will come and look at this. This is an impulse, but it is not having any swing point after it. It is the current market, right? So it is not the impulse we'll look at. Also, this is an impulse. You have this bullish run, but it is not having any swing point after it that you can connect. The trend line can only be connected with 2 or more swings. So this one is not having any swing point after it that we can connect. So it is not what we're looking for, right? Now, this impulse to the upside, it is only having this swing point after it. This one, this is the major swing point after it. All of these swing points are just pullbacks from this bearish run. So this is the major swing point after it. So we can connect this one and this one. But if we are to connect that one and this one, the impulse won't be called this. The impulse will be called this one. Because this is the last impulse that created this swing point 1 and also another swing point 2. So we can connect these two highs from the trend line. So the current impulse on the 5 minute right now is this impulse. And the current swing point we are having is this one and this one. Okay. Now, there's something I always mention about corrective impulse. Corrective impulse. Now look at this level. We have this impulse to the downside, and we have this impulse again before the market start relaxing, creating this swing. Now, this is the corrective impulse. This was the impulse that created all of this. But for now, this impulse is what we have to respect, this small one. Because if you look very well, the swing it created, this swing can be connected to this swing. Look here. 1, 2, they can connect. The two of them can connect. So the impulse that we are respecting if we are drawing this trend line is this impulse, not this bigger one. So this is a corrective impulse. And I said the current market have the highest probability of playing out. So it is the corrective impulse that plays out because it is the one that is current. This is the current one. This one is behind it. So this is the current one. So the current one have the highest probability of playing out. That is why we use the impulsive correction. And that is why we had the market play out from this level, because it respected this impulsive correction. After this impulse corrected, went up, came back down to respect this previous swing of the impulse, and then it went back up. So that is why the market respected here, because it's respecting the current structure, which is the current impulse, which is the impulsive correction. Impulsive correction is an impulse. Is an impulse after an impulse. Normally, you're supposed to have a correction after an impulse, right? But when you have an impulse after an impulse, then the impulse that comes after the first impulse is called the impulsive correction. Because it's supposed to be normally correction after impulse. But since it is impulse after impulse, the impulse becomes a corrective impulse because it's supposed to be a correction, not an impulse. All right. So we have this structure on the 5 minute, right? Using this impulsive correction, we have this structure on the 5 minute. So what we anticipate on the 5 minute, that we need the market to drop down to this level. Then we can finally look for the third touch of the resistive trend line. Then from there, the market can do whatever it wants. And if the market, I'm sure you are following the anticipation I'm doing, right? This is where the market.
Yes.
This is another very, very important skill or understanding to do in the market. When after plotting your trend lines, right, you don't just wait for the market to reach that trend line. You need to understand the what's it called? Forecast. All right. You have to forecast two sides. If the market does this and if the market does that, that's why you have probables and possibles. If you are focused on the market must come to reject and go here, then you are in trouble as a trader. You're supposed to be very, very flexible. Make sure your mind is not set to the market must do this. The market it can do this and it can do that. All right. So if the market comes to reject this trend line, if the market comes to bounce off this trend line, we look for sells, right? We look for buys to give us a third touch on the resistive trend line. And whatever it does on the resistive trend line, tell us where we are going next. All right. And if the market come through this trend line below and break below it and close before going back up, that time we are to evolve our trend line from the impulsive correction to the previous correction that we had, which is supposed to be now is going to be something like this. You understand? At that time it's going to be something when the market breaks through the trend line we had from the impulsive correction. This is the trend line we had from the impulsive correction. Anything that makes the market come through it, close below it before coming back inside of it, then we have to evolve to this impulsive correction to be our overall correction. Okay. So as a trader, what you do is just for you now to wait. You have analyzed everything. So what we do now is to wait. That's why you need to have the two sides in your mind, because it's not always every time that what you think happens or the way the pattern tell you that happens. Sometimes the market does otherwise. So you always need to have two probabilities in your mind. If we came to the chart before the market broke this low, I will also be anticipating that okay, maybe the market will only sweep the low and go back up. That's very, very possible too. So whenever you are seeing the market approaching the previous swing point, it's either it sweeps that swing point or it breaks below. Now this one have broken below. So when it breaks below, you're in a downtrend, you only look for pullbacks, then we can sell off. So that pullback, that is why you see that this trend line, that's why I see that this trend line is descending. You can see trend line is falling. this level is not going to be up to this level. So when we are having the pullback, the market will only go back to a trend line. That pullback won't be up to the previous swing because it is just a pullback. Then we can sell off again because we're in a downtrend. The same thing with this. When the market broke through this swing point to the downside, it's only a pullback that is this. This pullback is not up to this previous swing because the trend line is descending. So this pullback is lower than this one. So after this pullback, we sold again. Now, the same thing have happened, it has closed below, it's going below. So when it starts to come back, we can buy because it's a long move. So we can buy from here, and also we use trend line to support ourselves. So we can buy from here using our trend line and our entry criteria. We can buy from there. When the market takes whatever I want to take around here, I'm sure you understand the inducement and all of that. We do takes them, and then we come here, look forward to mitigate and give us entry from here. Then we can drop. So this is how you read directional bias on the 5 minutes. Always come to the current impulse that have swing points after it. Why you're looking for the swing point is because of the fact that you need the swing point to be able to connect your trend line, which is going to give you the pattern. I always say in my YouTube that if you don't understand swing points as a pattern trader, you can't survive in the market. You're only deceiving yourself. If you don't understand swing points, you have to understand swing points very well before you can survive in the market as a pattern trader. A lot of people know how to just come and plot the line, but you don't understand why the market, that point is happening like that. All right. So you have to understand the swing point very well before you can survive as a pattern trader. So I think we are done, or we have read good directional biases for you. Let's look at the entries. You said the entries are being your problem, right?
Yes.
All right. So let's look at the entries quickly.